Well, excellent. It's been we've had a little bit of a hiatus to give everybody. They were so excited in seeing us so much that we had to give people a little bit of a break on. And then of course you had to go and meet your twin brother in the back there, Sean. Uh, so it's great to see everybody, and I would love to kind of get we some amazing things have been going on in the mortgage world. So I would love to get some updates on the world of lending, Sean.
Should we start there?
Let's start there.
All right. Well, it's kind of status quo, but we're seeing more and more jumbo programs come back. There's 15% down up to about 1.5 million available now, and
Wow.
interest rates are not horrible. It's different, but it's not. It's like in the threes instead of the twos. So that's good. That's a good thing to see come back. You can do 10% down with a max loan amount of 1 million.
And is that all on one loan?
Yeah.
That loan product? Wow.
Yeah.
So how does that one? That one work? And what are the rates like on that one?
So that's what's interesting about it is, and this is all very. I'm trying to apply logic to things that aren't normal. So what we're seeing with the 10% down with a loan amount of 1 million and the 10% down with a loan amount of 15% down with 1.5 million. It's the same loan program. It's a 30-year fixed. If I had to ballpark a rate for it, I would say it's like 3.25, which is incredible, historically speaking, right?
Mm-hmm.
But what you end up doing there is you're paying discount points. So they're charging you points for that interest rate. And you can go higher in rates if you want to, but it's basically like 10 basis points improvement for an eighth in rate. So you're up into the fours before you even make the cost you're not getting rid of enough cost to make it make sense to be in the fours. So to me, they're encouraging, we want you to have the low rate. And that's what I'm seeing with a lot of the loan programs right now is this is a rough time. We know that rates will be higher in the future. So they want everyone to have these low rates long term, because if you're buying a house right now, the odds are you're not ever going to refinance. It's very likely you never experience refinance unless you need to pull cash out of the property or you're getting divorced or something like that. But otherwise, you're probably not going to refi. So I think that's the logic there is, hey,
we're going to have a generation of buyers 15 years from now who are like, refi? What's a refi? We've never heard of this concept. Why would I do that?
No,
well, you wouldn't do it because your rate is so low. You've never had the scenario.
No, and I truly believe that. Like anyone who's refinancing right now, this is the last refi. If you're buying a house, you'll never refi. And so that's the logic. So like I talked to a client earlier, she was asking me about ARM loans and interest only, and I'm just like, their ARMs exist, but the rates on those are the same, if not worse, than what I'm seeing on a 30-year fix. And I think it's the same logic. If you take a 5-year, 7-year ARM, 7 years from now when that loan goes adjustable, it's going to be higher, and that puts you at risk as a homeowner as well as the bank, right? So they're just saying, look, let's just get everyone on a low 30-year fixed, and neither us nor the buyer have to worry about it.
Wow. So and can you speak to the significance of having just the one loan in that scenario? Because the other way to do it is with two loans, right? If you've that low down payment and mortgage insurance, and it kind of gets complicated and expensive.
Yeah. So there's pros and cons. There's not the answer. There's an answer. Like there's multiple ways to do it, and each person's different. If you want to do 10% up to a purchase price of about 1.4 million, we're doing that with a first and second mortgage. And so the first mortgage is a conventional, normal 30-year fixed. Interest rate's probably like 2.875. Great credit. This is not a guarantee to lend. Everyone's situations are different. So get a direct quote. But the rates are in the twos on that for the most part. And then the equity line, the home equity line of credit is what we use as the second mortgage. That's going to be around 5.99%, and it is adjustable. So it's a higher interest rate for that second, but it has an interest-only payment. So even though you're paying more in interest, you can still have a lower monthly payment, but you're only paying the bank, you're not paying yourself. So the trade-off to that is this 30-year fixed with 10% or 15% down. You're done, right? It's a 30-year fixed. You never have to worry about anything adjusting. And there's different situations. Like I have somebody right now that we're closing Monday, she elected to use the first and second because she's a business owner. She's expecting to invest in real estate. She liked the idea of being able to have an equity line available and pay it down, draw against it, pay it down. It gives her cash flow for her real estate investments as well as her businesses that she runs. So she liked that. That was more advantageous to her than a 30-year fix. So she wanted to quickly be able to access her equity.
Wow. Yeah. So, and you can set it up that way. So you could do like a 70% loan with a 10% second kind of scenario
Exactly.
if you wanted.
That's exactly what we did. So she's buying a house for just under 1.2, I think. And we have a $675,000 first mortgage and a $175,000 second mortgage. And that gave her, so she's putting 20% down, but it just gave her the ability to quickly access equity when needed.
Amazing. Good. And that's the best of plans where one thinks out, okay, like there's 5 to 7 years of a runway here. How would I use this product? And, you know, I'm never going to refi. So that kind of keeps available the ability to have, you know, access to that the equity. That's
right. And that's a good point. So her first mortgage is at 2.625% on a 30-year fixed. She paid a 1% discount point to get there because she said, I don't ever want to think about this again. So this is her one and done. She's like, I'll have cash flow. I could, you know, throw $20,000, $30,000, $50,000 at my equity line when I need to. The first mortgage will be there, you know, it just goes away over 30 years, but that's dialed. But I have my flexibility. And so that's, which I thought was a great solution for everything that she's planning to do. It was the best mortgage solution for her.
Wow. That's
awesome.
That's pretty incredible. Cool. What else? You know, has there been any fluctuations with the week that's been in it, where nobody knows where up is or nobody knows where down is?
A little bit.
And
not
the stock
much,
market seems to be on a tear.
So this is what's interesting. Because I did a video, a rate kind of update / prediction last week, kind of going because people were asking what's going to happen to rates after the election. So I made a prediction, and my prediction was that not much will happen with rates, regardless of who's elected. And who knew that nobody would be elected? But, so rates are staying pretty flat. And again, to me, the Federal Reserve is a backstop. So the Federal Reserve is stopping the volatility we would normally see. And we've had rates be flat for basically 4 months now. So it's that prediction so far has been true. But I saw something yesterday about the stock market because my prediction was if Biden got elected, the stock market would react negatively because they react positively to Trump's tax plan. So when Trump got elected, the stock market took off because all these corporations are excited about the corporate tax plan. Well, if Biden's going to get rid of it, then I figured the opposite would happen. And that didn't happen. And I saw something yesterday morning about that. And it was basically because the Republicans kept the Senate, the market's basically thinking whatever Biden tries to do, there's a stop in place so we don't have to worry about it. And I never thought about that before.
Yeah, it's kind of like the whole process of the checks and balances kind of coming into play. So what else is going on in product? Any other interesting angles or ways of working in product?
I could we could talk about like that specific instance I emailed you about, Sean, with like the second home versus, and I actually got the question, because people are looking into buying second homes now a lot in terms of just having a place to get away and work remotely. But maybe if it's the difference between a second and third home, actually, is a question that I got. Like, is there a big rate change when you get into owning multiple properties?
No. So the one that Haley and I are working on now is somebody considering buying a home in La Quinta in the desert, and either doing a cash out refinance on their current home, their primary residence, which would logically, that's what people I think lean towards because I live here, it's easier, faster, cheaper money. A second home basically has the same interest rates as a primary residence. There's some variables to that a little bit, but generally speaking, it's the same. And you can have multiple second homes. So you can have a house in Lake Tahoe as a second home, a house in La Quinta as a second home, a house in Hawaii as a second home, a house anywhere. And it's still considered a second home. And those rates are going to be in line with the primary residence. It's an investment property that will have a higher interest rate. So if somebody's hearing this and thinking, oh, well, great, I live in San Francisco and I'll buy that's a bad example because people do that. If I live in Oakland and I'm going to buy a second home in Berkeley when I'm really going to rent it out, why do you need to go on vacation in Berkeley when you live in Oakland? Right. So there's
don't they have a mileage? Doesn't it have to be 50 miles from your current residence?
It used to be that way, but the reason I threw away my San Francisco example is there was people who would live in Danville, like where I live, right? What is that? I don't even know how many miles it is, but it's only 40 minutes. Mm-hmm. They would have second homes in San Francisco that they would live in at work and then go back and forth. So the mileage went away, and it became more of like is there logic in it? Like, you couldn't do the opposite and buy a second home in Stockton if you lived in Danville, because it's like, why do you want a vacation in Stockton? Where San Francisco is a vacation destination. Napa is a good example. I should have used that one first. Napa is close to the whole Bay Area, and there's plenty of people who have second homes in Napa. So it comes down to just logic and does it make sense is kind of how they look at that.
So if it's a home that you're going to use as a second home, but also rent out, say, half the year, is it still a second home or is it an investment?
So do
I have to tell anyone that?
When you buy it, so what is your intention? So the loan application, everything comes down to intention when you're a home buyer. Like if you look at 2008, they blamed Wall Street, they blamed mortgage for all this fraud, but there were plenty of people, individual home buyers, lying all over the place, right? So we all played a part in it. So it's your intention. What do you intend to do with this property? And this is where it gets tricky, because for tax purposes, you can rent out a second home. I think it's considered a second home as long as you stay there 2 weeks out of the year, I believe. And that means you could rent it for 50 weeks out of the year. Yes. And to the IRS, that is considered a second home. I'm pretty sure I'm right on that, but I should ask a CPA about that. But that's how the IRS would look at it. From a mortgage perspective, if you bought a home in Lake Tahoe, I'm going to stay there. I'm going to go snowboarding. I'm going to go up there in the summer and go fishing or whatever it is. That's a second home. Once you rent it, when you go to refinance, if you ever were to refinance, that's when now it's an investment property. Because when we look at your tax returns and you claimed rental income, it's no longer a second home. So you can buy it as a second home because that's your intention. But then if it's, whoa, I can make a little money on this thing. As soon as you file income on your tax returns, now it's now it's an investment property.
That makes sense.
Interesting.
So that's a good, like I had an example of that where I had somebody who wanted to refinance and they were in Southern California and they had a 2-unit property. And when I looked at the statement, the mortgage statement was mailed to a property other than the actual property address, which that normally means it's an investment property. And it was a 2-unit property. And she's like, well, I'm like, hey, you guys, this doesn't seem, I just want to check. Are you guys living here? She's like, he claims that he lives there on the tax returns. I'm like, but does he live there? And she's like, and she didn't answer. And all their documents, pay stubs, W-2s, tax returns, everything went to a different address. And then I looked up the property and it was a 2-unit. You cannot buy a multi-unit as a second home because that's clearly going to produce income. So she's like, it's a second home. We just rent out the other unit. And that makes it an investment property.
So you can't do like a split where, hey, 50% of it is my second home and 50% of it is investment?
You cannot finance a multi-unit property as a second home. Like you can't even purchase it that way because it's going to be income producing.
So you can finance it as an investment. It's just going to change your rates.
Yes,
the rates are going to be.
Correct.
So if it's a second home, the advantage in trying to do it that way and why you had those particular people trying to figure out a way to do it is because they get a better rate.
Correct. Exactly. So that's why these people wanted to claim it as their primary residence so they could get a lower interest rate. And sorry, it's not going to work. That's fraud, right? You do not live there. You're lying on your loan application saying you live there. Like, I hate to use that word, but that is mortgage fraud.
Yeah. Totally. All right, cool. So Haley, in regards to these products, what are we seeing in the marketplace out there on the buy and sell end?
Yeah, so this last week, we had 61 new single family homes come on the market. So that's like in line exactly with what we've been seeing.
Like week after week, it's just like the same number showing up every week. It's incredible.
And then Condos and TICs 96 new ones, so fewer.
Fewer. They're going down.
And 12 multi-units.
12. And then what closed escrow in single families last week?
53.
53. So still in that hand for hand. What's coming in is going out. And then on condos, what closed on condos?
67.
67. So we're now, we were at a third of the inventory coming in, was a third was going out the same week. Now it seems like we have 2/3, a lower amount coming in and about 2/3 of it going out.
Well, so what's interesting too is the ones that went into contract. So 75 single family homes went into contract, and 117 condos and TICs and lofts went into contract. So that's a decent amount. And
that's a lot.
From our sales meeting yesterday, there were some interesting numbers. Specifically, we were looking at days on market. And the median days on market for the city for condos was actually stable, so month over month. And it's 32 days is the average median days on market for condos. Whereas last year at the same time, it was 17, which is no surprise. Specifically, we looked at South Beach. Only 10 condos sold in South Beach in October. And the median days on market there was 49. So
49.
Long time. Yeah. And then we also looked at District 5, so like kind of the central district in the city. Median days on market in October was 28 days. And then let's see, in general, single family homes, only 13 days on market. So it's exactly what we're looking at. And last year it was 14, so they're going even faster.
They're moving faster.
Multifamily, 41 days, which is a 64% increase from September. So we have seen a large increase of multifamilies, which we're experiencing with buyers right now. Like there's just more choice.
Yeah.
Are you seeing more buyers want multifamily?
I mean, we have a few buyers that are interested in that.
Yeah.
I think it's a super smart play as a first-time buyer. So if there's an opportunity to get one without the fight, like we're dealing with the single families, I love that concept.
Yeah. I mean, a lot of landlords are just, that they've been doing it forever over it.
Yeah.
And you're getting, I think there is more of people see the benefit in, with rates as low as they are, with rents coming down, there are still some multi-units out there where the pricing has, the pricing has stayed fixed and the sellers are sticking to their guns. They tend to be the ones that are sitting there. And then there are multi-units where the price has dropped on them. And how often do you get the lowest interest rates that we've ever seen and a kind of price break on the property? And so it's kind of like a double yes to kind of making it easy to move forward on these kind of scenarios. And you get you get really the benefit of your maximizing how low your payment can be. And then with the way rates are at the moment, every every $400 you get in rent is covering more than $100,000 of borrowed money. So, so if you're getting, rental income of anywhere around, $4,000 a month in rental income, that's $1 million a day.
Yeah. It's pretty
wild. If I could do it over, my first home purchase would be a 2 or 3 unit, probably 2 just to make it comfortable. Yeah, just the mortgage is covered by the rent, and then I keep doing what I'm doing, save up more, and then that's like I have a lot of veterans that are looking at that as their goal when they get out of the military, because they don't have to put money down, lowest rates, and it's just it's
the way to go. And 100%. And interestingly, in San Francisco, if you're going at it from that approach, it doesn't really make any difference to purchase a 3-unit building over a 2-unit building, because legislatively in San Francisco, a lot of times 2-unit buildings, because what you can do, because you can condo convert to 2-unit building, a lot of times those 2-unit buildings sell for a similar amount to what the 3-unit buildings sell for, because you've got more ways to add value and increase the value of that property. That's quite easy for multiple homeowners. So, you know, if you're looking at rental income, you may as well get rent from 2 additional units rather than 1. And if you're going to be paying the same money as you would for a building where you're only going to have 1 additional rental unit, why not buy the 3-unit and have the 3? So it's a great play in San Francisco, and has been a life hack for, and you know, it's a deal that just gets better and better as you own it longer and longer, you know, 20, 30 years down the line, and it'll help you finance your retirement and everything.
Hey, it's like everyone's goal is like, now with me having a family of 5, it's like, oh, I want to buy a multi-unit as an investment, where I should have just done it backwards. And it's one, yeah, anyone that's starting out, I'm strongly encouraging that concept, as long as they understand that it's a long-term play. This isn't a buy and sell. Like you're going to have this asset forever.
Yes, and if you start there rather than with the fancy luxury condo kind of scenario straight off the bat, it's a great place it really is a place to set yourself up in. So cool. Well, is anything else, observations to add into the mix, Haley, on the regular buy and sell world?
I mean, it's just kind of been steady. I was away last week, so I don't know if I have anecdotal stories to share. I left you high and dry. Sorry.
Yeah. No, we survived.
But I don't know. I mean, it'll be interesting to see if it slows down a little bit going into the holiday. But like so far, it hasn't. And I don't know. It's like we're all going to still be sitting in our houses for the next couple of months. So I don't know if anything's really changing there. I guess next week we'll have president-elect. So that'll be
Let's see where we go from there. Well, you know, I think one thing is that what's really going to come into play here is whether or not we will get seasonality with the Thanksgiving only 3 weeks away, really, and Christmas only, you know, another 7 weeks from where we are, but another 3 to 4 weeks on top of that. A lot of times this is the period where we start slipping into the seasonality of our Bay Area market, and that with the loss of the month of March and the month of April, where just things shut down with COVID, we do have a lot of pent up kind of demand, and that's either going to push us through that seasonality, or that seasonality will actually show up as it always does. So it's going to be interesting to see how that plays out. Totally. Well,
determined.
Well, we're trying our new format here, where we're going to be brief. We're not going to be as long-winded as we have been in the past, and we're approaching up on the 30-minute mark. So let's where do we find you, Sean, if we go looking for you? Like that guy in the background with the check shirt, how do I find that guy?
He used to hang out at open houses, but now he just sits in this room all day. I'm online anywhere. Just Google Sean Herrero on Instagram @AdventureLender, and then my email's right. I can't do it right here.
Right, the other side.
Oh,
yeah.
Oh, yeah. Mine is right there.
Oh, right, yours right there. For me, when I'm looking at it, it's right there. There you go, right there. Awesome. And Haley, if anybody's looking for us, wants to talk more about buying a multi-unit, where do they find us?
Elevation SF on Instagram and elevationrealestate.com, or just Google our names or Elevation Real Estate, and we'll show up.
And we'll be there. Awesome. So this has been great. Thank you, guys.
Thanks,
we'll
John.
have another full disclosure Thursday next week. We'll see you then. Any surprises? Anything coming down the pike that you can? And we may have a president, but they might still be counting. So we'll see.
Nevada might still be counting.
That's
Yes.
the only good thing about this is all the Nevada memes that have come out in the last couple of days. Those are keeping me going.
With all of the casino chips they have, you think they'd be faster at counting. Like they do these super quick counting,
Really
like the
good point.
machines. And yet when it comes to votes, man, it's a slower process.
They're out of practice. The casinos have been shut down. I guess they're up and down.
True. All right. Awesome. Cheers,
All right,
guys. Have a great week.
Bye.
Thank you. See you next week.
See you next week.